You're watching Masters in Trading Live with Jonathan Rose.
Hey everybody, it's Jonathan and welcome back to Masters in Trading Live. We get on here every single day that the market's open, 11 o'clock Eastern time, to go over the markets, share some good quality education, and give you a couple of tidbits, a couple of thoughts. Today's a little bit wild because we are back in meme stock mania. So we're going to go over 4 topics today. Game options are going just cuckoo. I want to look at the game AMC options, okay? Every single time I get on here, I tell you that we want to look at the market differently than everybody else. Well, right now, everybody's looking at these meme stocks. They're looking for the next meme stock to jump off. Let's look at objective data. Let's look at the options. Let's see how game and AMCs are actually pricing. Next, I love this example. I have not gone over this example yet in Masters in Trading Live. We're going to talk about Delta's impact, your optimal levels to trade when I share a trade. So I share lots of trades. And so if we're sharing a trade and the stock's at 15 and we're buying the 20 strike options for 50 cents, well, what happens if that stock moves to 17? JR, do we still like the trade? The options have moved. I'm going to show you exactly how to figure out the exact same levels of those option prices, whether that stock's at 15 or 17 or 19. Okay, let's get into it. Let's have some fun. All right, so we're going to go over the game and AMC options first. Let's kick those off. And I'm just going to kick this off with just the game options tree. And coincidentally enough, game is trading at 33.60, so it hasn't really moved. Okay, let's slow down. We're looking at June options, okay? 37 days until expiration. What could game possibly do in 37 days? Now, the market makers are expecting about $24 of movement. $24 of movement, that's the price of the straddle. So 24 up, 24 down, that's going to be your expected move, okay? There is a gnarly amount of volatility in this. Anybody out there gambling or trying to play this stock, that's not a good do, okay? Maybe you'll make money, but it's not a good do. It is pure gambling. Now, let me take this off because I want to show you this area down here that I put a rectangle around. That's the out of the money stuff, like way out of the money stuff. So 33, and then we talk about the 75s, the 80s, the 85s, the 90s. Let's talk about whatever. Let's talk about the 100s. Now, 100s, guys, if you buy these, you're buying stock at 100, okay? Why would you buy stock at 100? Because you get leverage. But these are trading for $5 freaking dollars. An absolute joke. Game is probably not going to trade up here, but no brokerage firm is really going to allow you to sell these things. The problem ends up being when you have a ton of open interest here. And when you start having a lot of open interest here, which we don't have as much right now, but the reason open interest is so scary is that's when you can have what's called a gamma squeeze. And a gamma squeeze would happen with all this open interest turning into stock. If the stock gets above there, all this open interest turns to stock. There's not necessarily the underlying stock to allow you to cover those. So game is super, super dangerous. I wouldn't touch this with your enemy's trading account. I wanted to show you the potential for movement. The potential for movement is always going to be that straddle, the calls plus the puts. AMC, you're dealing with the same exact thing, 260% volatility. The strike is at 5. So if we look at the 5 straddle, I don't know, about 375. It's just ridiculous. 81,000 open interest here. That's 8.1 million shares if AMC gets above 20. I don't think it does, but again, that's what could potentially happen as a gamma squeeze. This is gambling. Stay away from it. Don't do these trades. Come on. This is an important topic. This is a topic that we will want to follow and we'll want to do these trades. Delta's impact. Delta is so important. So Delta, how the option price changes with a $1 move in the underlying stock. Okay? So Delta measures the sensitivity of an options price to a $1 change. Specifically, the Delta value tells you how much the price of an option will change, okay, if we change by $1. So let's get into an example. So if the underlying stock moves $1 and the Delta is 6, the option will move by approximately 60 cents. Okay, and now we're going to go through a full example right here. Stock price, $15. 20 strike is trading at 25 cents, or the Delta is trading at 25 cents. Options price is 40 cents. 10 days until expiration. What happens when that stock moves? Okay. Delta, you can also just give it a little caret. It's the probability of your position ending in the money. So right here, there's a 25% probability that the 20 strikes end up in the money. Well, now the stock is rallying. 15s go to 16. The 20 strike, originally for 25 cents, well, as this moves from 15 to 16, you'll notice the options price also moves from 40 cents to 65 cents because that's that delta. Okay? Now the stock's at 16. The delta has also risen. Now the market is saying, hey guys, there's a 30% probability by expiration that this stock ends up in the money. We keep on rallying. We go to 17. Okay? 30 delta. We add this 16 to 17. We add the 30 delta. Put it here. And we get the $1.05 price. Again, the delta is changing because there's a higher probability of ending up in the money. And we continue to trade like this. Now, let's say JR, which is me, this guy, says, let's buy 20 strike for 30 cents. And the stock's at 16. Okay, so let's say we share a trade there. The stock moves, and the stock moves to 18, say in 2 days. The equivalent pricing, 16 all the way to 18, is going to be, in this example, that $1.55. So this at 18 and this at 16 are the same. The same volatility level. When we share trades, we're sharing trades at a volatility level. So when the stock moves, you could adjust the pricing to see if that trade is still valid. Go over that example. It's so important. But you just need to revalue to see if those trades are still applicable. It's a very, very cool just way to follow prices. Like there's nothing really that's more important than going over this. So again, as the stock moves, your strike is staying the same. The delta is the likelihood that it's going to be in the money. And so as that stock rallies, the likelihood goes higher and higher and higher. Here's a question that I'm going to leave you with. What is the delta of your at-the-money options? What's the delta of the out-of-the-money options? Think about it. If delta is the likelihood that a position ends up in the money. Now, I know some stocks are hard to borrow. When stocks are hard to borrow, you have to pay an interest rate for being short them. So we're not talking about that right now because that's going to throw off our delta. For anybody who's experiencing options, you may be saying that out there. But right now, what is the delta of the at-the-money options? If we think that stocks could either go up or down, it's pretty random, right? Well, the delta for the at-the-money options is always going to be around that 0.50 because it's got a 50% chance of going up or a 50% chance of going down. So use that delta, the likelihood a position ends up in the money, it'll really help you. For anyone that joined our All Access service, that includes our Earnings Academy, that includes our Divergence, and that includes our blockchain. Right now, I got 2 earnings trades that I'm going to share with you. For everybody else, thanks so much for watching. We'll be on here live every single day, 11 o'clock Eastern.